But today, we're going to be talking about the topic that's been on everyone's mind this year, internet capital market, as memed by the very famous and very lovely Lily. We're going to talk about how DeFi is downstream of internet capital markets, where that is going, and what we see as the future of the original Solana vision. So Lily, tell us a little bit about yourself and what you've been doing since you joined Foundation.
So I started my crypto journey with Bitcoin back in 2013. And I think back in 2013, really it was kind of Bitcoin-only world, and all of the ideas about what blockchain was going to be was mostly just in the form of blog posts and Bitcoin talk, forum discussions. I actually think all of the things that are going to get built in crypto have already been written about, have already been imagined, and have already been POC'd in one form or another. It's just that the infrastructure was not really there to bring those to production and make them very tangible up until, I would argue now, with Solana, of course. And what got me interested in Bitcoin in the very beginning was, well, I think the early days, people got into Bitcoin, you got into Bitcoin for some combination of three reasons. You were into the tech. I'm not a developer, but a lot of people were, like distributed systems, pretty cool stuff. Second, you were trying to buy drugs online, which I was not trying to do. And then the third is that you were into the politics of it, right? This idea that there's a broader spectrum of scale ownership models that do not yet exist in the world today, but probably should, and might be an alternative to many of the imperfections that we kind of see in the various governance models around us. So that's why I got into it in 2013. And what also was kind of an extension of that is this idea that you could have all 5.5 billion people in the world in the same way that they're all on the same information internet. They would all share that kind of base infrastructure for sharing information and programmability information that led to infinite content, infinite applications, and infinite amount of time spent online. That the blockchain could do something similar to that, but for financial markets. And so the easiest corollary to draw would be anyone can log on, has access to the internet, has access to all the information, and through blockchain, anyone on the internet would have access to so-called bank account through a self-custody wallet and be able to directly access financial markets. And so the buy-side part of this has been articulated over and over and over again. It's about financial inclusion. And what do people typically mean by that? Well, if you were to count all of the people in the world that live in hyperinflationary economies, I think it's certainly in the billions. And for all of those folks, having access to digital assets means they can have access to literally millions of different tokens. And the ones you probably like the most are dollars, Bitcoin, and maybe Solana. You have access to assets outside of whatever might be available to you in your local financial ecosystem. And frankly, most of the economies in the world are actually not really great for their citizens, right? So I think that's been the traditional articulation of financial access and financial inclusivity. It's typically focused on long-tail buy-side. And there's a lot to say about that, which we can talk about. But then I think when we start to think about internet capital markets, it's also talking about the sell side of that. And the sell side of that being the companies, the issuers that are not able to access global liquidity today. We typically call that going public. And if you look at the IPO market, which is essentially the process of getting access to liquidity, that's 10 years, extremely expensive, and there's been incentives to stay private for longer. And so what that means, you kind of, in my opinion, have a bit of an imbalanced market right now where the supply of available investment assets, even in a very sophisticated market such as America, sitting in New York, which is the heart or the belly, however you want to put it, of that, there's actually probably more restricted supply than there should be. And so we wanted to shift the conversation to really talk about the sell side in addition to the buy side of financial markets. So what that means is, quite frankly, small business access to capital markets, increased issuer access to capital markets. And when you think about what we in crypto have done up until now, that's exactly what's happened, right? 3.4 million coins. Now everyone can be an issuer. Now, of course, the issue therein is that most of those coins, tokens that have been issued have declared themselves to have zero value. So the asset quality obviously has questions. And so then, where do we go as an industry from here, knowing that, there's been many situations where technology, the first phase of adoption is fringe-like, right? So where we go from here is, okay, well, we have global liquidity increasingly coming on chain. And so how do you bring better assets to sort of level up that market, at least on the supply side? And that's the other side of internet capital markets.
There's a lot of talk about on-chain IPOs that are taking place on Solana. Obviously, Superstate is doing the work in bringing equities on-chain. And I really like the diversity in what meme coins have showed us is that Solana is capable of becoming essentially the exchange to the exchange for internet value, right? Now, when you add real assets in there, like an on-chain IPO, that's interoperable with stablecoins, interoperable with all these crypto assets, I think that's where you really start to see why this is being built on an L1 and not an app chain. What's your take on that growth from meme coin cycle to on-chain IPOs, and why do you think that is best placed on Solana?
It's easy to talk about TPS and it's easy to talk about on-paper metrics or even testnet metrics, but until you've gone through like the infrastructure stress testing that Solana's gone through over the last year with meme coins, you don't really know whether you can production handle, for example, a global asset launch happening on a Friday night, going through the weekend in definitionally off hours, and that happened on Solana. So I think over that weekend, Solana probably outperformed NASDAQ in terms of in volume liquidity, and the network itself went off without a hitch. And so that was pretty awesome because that's like actual and production performance. That's not just sort of theoretical performance. That's beyond finality, measure finality. That's beyond whatever you can see from TPS and 400 milliseconds, so on and so forth. But the thing is that if you're really trying to play eventually at the level of competing with sort of co-located, actual sort of high-frequency traded markets, that's about 10 milliseconds, and Solana is 400 milliseconds. Now, of course, constantly trying to be at the edge of what networks and what hardware can provide, but a decentralized system has different trade-offs than co-locating in Chicago data center, right, for trading options. So given that, what is the edge of blockchain-based markets? Well, it's greater access to assets. It is a broader range of different participants. You certainly don't have retail trading against jump on their microwave frequencies, right? That's not a thing. And so there's other features and other reasons why this infrastructure adds more value to a different range of participants. And one of those is you get access to assets you can't get elsewhere. And the most extreme sort of degenerate version of that is 20,000 meme coins a day. But then the more sort of high quality, asset quality version of that is here are equities, right, that are launching natively on a blockchain and are better situated for the type of distribution you get on a blockchain. And when you talk about something like an IPO, or let's call it a corporate equity issuance, why is a blockchain different? I'm not going to say it's strictly better than going with an investment bank and going through traditional distribution channels. In some ways, it is going to be worse, especially at the beginning. But if you think about the core purpose of what, for example, a banker will do and what the traditional financial system does is there's probably three areas of contribution. One is they give you distribution. The other is they help with price discovery. And then the third is brand. Now, the brand part of it is never going to go away because Goldman Sachs is Goldman Sachs, and there's that intangible brand value that will always accrue to being Goldman Sachs. But the first two are things that blockchains can innovate on, or at least sort of expand the spectrum on. So on distribution, well, now you have direct distribution to millions of folks, right? And if you are going through traditional IPO channels, well, the bank has the distribution networks through their equity capital markets, all of their syndication relationships, all of the wealth managers they know, and they basically put their sales force on it. That's how you do distribution in the traditional world. Well, we know how you do distribution in the online world. You do direct distribution through, we already do that with social media content, and that's, I think, a corollary of how content was distributed in the past till now. And I think there's some learnings for that, so how assets are going to be distributed in a consumer-first, let's call it direct distribution environment. We also saw inklings of that with the ICO era. If you guys remember, maybe people here participated in those countdown clocks, which were egregious and also nostalgic.
Even NFT launches, right?
Yeah, NFT launches
you have
as
to be on the
well.
first block.
So let's just say that we've kind of proven that crypto can get distribution. And then the second one on price discovery, traditionally banks will underwrite, which means that they're kind of putting a floor in price discovery, and then they write their research reports and have people do the valuation ranges and all that type of stuff. Okay. And then they also help balance the books and they have the whole green shoe option to help more liquidity to sort of balance out price. Okay. So that is how you do price discovery in traditional markets, which is cool, right? But then crypto is also pretty good and pretty innovative about innovating on price discovery mechanisms. And we've actually done a lot of that in the past, but we kind of stopped doing it because people were getting nailed for it, But people have tried in the past different ways. A bonding curve is a price discovery mechanism. There's also ways of time gating. So phase 1, phase 2, integrate interest and narrow sort of what the pricing range can be. So there's ways that you can do distribution and price discovery on chain with smart contracts that we actually have already done quite a bit of. And so if those are kind of two of the core functions of building a liquid market around an asset, well, crypto we can do some of those things too.
Agree. And I think the most beautiful thing about crypto bonding curves is how iterative and open source they are. I mean, if people figure out Pump.Fun obviously is responsible. That single bonding curve is responsible for all meme coin launches on Solana. Anybody else can also launch their own version of bonding curve that could launch different types of assets, right? So I think the open source and replicability, programmability of being on chain is really important in crafting this vision. Where do you see the role of DeFi in all of this? I think the way that we see it is that it's an on-chain financial institution that obviously captures a lot of value for these assets that are coming on chain. Mm-hmm. But where is your head at in terms of where DeFi
Can I be honest? I feel so liberated in this cycle because I felt for a number of years I had to pretend that NFTs and gaming were anything ever.
Wow.
And I
the
always
truth
thought,
comes out.
Yeah. And so I felt like I was cosplaying for a few years, having to validate that, it's about consumer and Web 2.5. In my heart of hearts, the entire time I was thinking, guys, these are all just financial products anyways. And to me, the greatest sinner of all of it was the big FOMO around gaming. I could go off on that one because I thought that blockchain and gaming, it was just a whole lot of hype and no substance. And I feel like crypto from the beginning, now and forevermore, has always been fundamentally about DeFi. DeFi is blockchain, blockchain is DeFi. It's always been about infrastructure for capital markets. And I'm very relieved I finally just get to say that and be
it's cool
yeah,
now.
guys, right? And that's now, and for a while I had to pretend it was we were going to be creating all of these new community DAO experiences based around monkey pictures. And I was like, even if that's true, that's a financial experience, okay? Whereas I see it as, so global liquidity is so powerful that you can make photos worth $1 billion, okay? So if we can do that to photos, funny photos, wow, we should point that at something else other than monkey photos. And point that at things that actually really add value to people, right? Like supply side capital markets liquidity for bona fide businesses. And so instead of playing in this trough of zero to low quality assets, it's when are we going to be able to point that at something which is more value added for both the buy side and the sell side? And I feel like we finally get to do that. So I think definitionally blockchain has always been DeFi and DeFi is always blockchain. And the only exception to that is Bitcoin. I think Bitcoin gets to be the asset where the asset is infrastructure, infrastructure is asset. Only Bitcoin gets to be sort of almost godlike, right? Hanging out and what is faith, a social network of money and all that stuff. Cool. And then everyone after Bitcoin is immortal and here to be building financial markets infrastructure. And what I like about us in the Solana ecosystem is we just get to be honest about that. And we just to be honest, that is a big enough thing for us to be doing. And DeFi is not a vertical, it is the entire thing.
I love that framing. And I mean, this is what I've been beating on my chest for years on. DeFi has been like such a small vertical, right? Well, it was stuck in the research and infrastructure phase for so long, and now it's becoming a consumer front end. It's actually taking over fintech. It's becoming the front end of banking, and I truly believe that holding a stable coin in your wallet is going to be what bank accounts look like in a couple of years, and all of that at the core of it is DeFi. So I share the same excitement for DeFi being cool now. Let's talk a little bit about Bitcoin on Solana. That's been something many parties have tried to bring on, and typically in a wrapped fashion. How do you see that growing? I do agree. Bitcoin safest money asset, and everything else is an altcoin. But how do we actually get native Bitcoin on Solana, and what is the role that it plays within DeFi?
Yeah, so I think the next phase of Solana DeFi is around being DeFi infrastructure for all assets and not just Solana native projects that launch tokens. The phase one of DeFi, it always makes sense to bootstrap around the native asset, which is why up until now, so much of the liquidity is paired against SOL. But then at some point you have to grow out of that and pair against dollars, a greater range of base assets. Dollars, Bitcoin, SOL is probably what it's going to be in the next phase. And then also just become infrastructure for all assets. And so that's why with RWAs coming on chain, like with Accred, that is not a Solana native asset outside of it being issued on Solana infrastructure. And that's what ultimately DeFi should be doing, right? This first phase of the way we talk about DeFi today was like, oh, Ethereum DeFi and this ecosystems, and we kind of have accepted that the DEXs are going to be specific to a tech stack, I think is only true in the first phase of growth. And we want Solana, the second phase of growth, we want Solana to be the infrastructure for all assets. Bitcoin is a big part of that, because if you were to take the spectrum of assets that are adjacent to being on chain today, and if you were to segment all of that and look at it, then there's roughly like crypto native and then RWA assets, and then of the crypto native assets, Bitcoin is 60% of that, and also does not have native yield opportunities within Bitcoin for obvious reasons. So we've been very specifically thinking about how to onboard UTXO chains assets, and starting with Bitcoin, and bring those over to Solana. And so that's something you're going to hear more about in the next couple of days. And it's not just Bitcoin, but UTXO chains. And so Gianni, who is here at the venue as well, she joined us. She runs the Comma Club. The Comma Club is for folks bringing 1,000, meaning 1 comma, or above Bitcoin over to the Solana ecosystem. And then I think we're going to pair that with the Kennel Club. The Kennel Club is for Doge. So there's the Comma Club and then the Kennel Club. Yeah.
Any joiners today in the audience? Please let us know. We love Bitcoin on Solana.
Yeah, for sure. And Bitcoin is likely to be, it's like a very sticky collateral asset, right? And I think on top of that, if you also just think about the emotion around different ecosystems, we love Bitcoin. I'm a Bitcoiner myself, so I would never engage in the emotional folly of speaking ill of Bitcoin, and it's extremely unwise and just wrong, and I think it's probably even immoral to do that.
I feel the same about Sol, too.
Yeah, well, that's another conversation. But here's the thing. People would expect me to say that. Well, it's just your job to say that. But with Bitcoin, it kind of irritates me when people make fun of Bitcoin or say bad things about Bitcoin. I think it's like even just disrespectful. And to be a moral person, you should be respectful of your ancestors, right? Let's just agree upon that. And so I love Bitcoin. And we want to bring Bitcoin over, and I think this is, some other ecosystems have oftentimes had about 30% of the ecosystem be very disrespectful towards Bitcoin, and then why are we surprised that Bitcoin doesn't like those ecosystems? Whereas, like, we're very clear, like, we are mortals, and please, grace us with your presence, Bitcoin, and that's something that we're investing in, and we're going to be doing more of that. So I think that last year I was at the Brussels conference, and I've been thinking this and showing this slide around the world for a while now. The future of crypto is Bitcoin the asset, Solana the infrastructure.
Yeah, and that's a lot of what we've been building towards with Drift, is the ability to use Bitcoin as collateral for both trading, borrowing, even having Bitcoin-based yields on chain. I think that's actually a big reason that Bitcoiners would move over to Solana, is if there is native yield that could look like wrapping Sol LST yield, but giving it to you in Bitcoin. It's basically rebuilding hedge fund infrastructure on chain for everyone, like native asset holders, private credit. Imagine being able to use your Bitcoin to borrow stables, invest into private credit, and have that all cycle back in the same platform. That is truly the magic of interoperability, everything being on chain.
Yeah, and what crypto, even Solana is not going to be at 10 milliseconds. Yeah. So what can Solana be if you're not going to be at 10 milliseconds? And then what Solana and what crypto can be is composability of assets, programmable money, capital efficiency. People have used different words to describe it. But what you can do is you have all these different assets, and some of them you consider to be high quality assets, others to be low quality assets. But then you can do anything. You can borrow against them, you can trade them, you can collateralize them as a bucket, or collateralized debt protocols. There's all these things that you can do with them, and then perp trade on your collateralized debt protocol basket of meme coins, like if you want to, okay?
The most exotic thing in the world.
Right? And which is not to say that all of the above are all equivalent experiences, but that is the range of sort of diversity of ways that you can use your money. So I think to be the best place for capital, you have to have all of the assets and all the ways to use those assets. And the ways that people use those assets span the spectrum between a simple payment to 100x leverage perp trading, which I know my friend Liam here is very passionate about.
And we're going to see more on that very soon. Maybe even up to 500. So I think, let's maybe fast forward a couple of years and think about what assets should be on chain. And if you were building something today, maybe in the Solana ecosystem to support internet capital markets, what would it be? And what type of asset would you, want to be working with?
I think, the obvious one is equities. I think you're going to hear more about that in the next couple of days as well. And some people might have seen the announcement from Superstate that they're going to be bringing equities on chain. So I think that if you look at the asset spectrum right now, one of the ways to characterize that asset spectrum is there are assets that are all price and no value. The extreme is meme coins, and then most of crypto is more price and value, even Bitcoin. And then on the other end of the spectrum, over the last 10 years, there's all these RWAs that have come on chain, but they're value and no price because they're very permissioned or just the nature of the asset, and they don't trade, or they can't trade even. So can't trade, no market, no price, right? And so for blockchains, what the sweet spot is, I think, is in the middle, which is equities that have value can also command price. People don't get out of bed to trade mortgage-backed securities, but you will have a lot of people that will get out of bed to trade Tesla stock in $1,000 of Tesla stock. And so if you think about also what adds value back to the blockchain ecosystem, well, in the blockchain ecosystem, you have sort of different stakeholders in the ecosystem. And to simplify, I think it's kind of like three main groups. One is the network run by validators. The second is the tech platform run by app developers in applications such as Drift. And then the top part is like the asset ecosystem and the issuers, right? And each of those folks needs to be making money over the lifetime of sort of ecosystem development, but they all make money off of different things. Validators make money off of transaction count, and they make the most money off of competitive transactions, meaning trading. And then the application developers will typically make money off of transaction volume, right? So the validators don't care that much whether the message is $1 or $1 million, but Drift certainly cares whether it's $1 million or $10 million in that trade, because you take a cut of that. And then issuers make money off of issuance. So there's areas where they're kind of like different parts of the value chain, if you will. And so when you think about sort of the assets that are most immediately going to be adding value to those three different sort of broad sets of constituents, equities is going to be transaction count, transaction volume, and then also add value to issuers. And so that's one of the reasons why maybe like a more sort of intellectual framing of why equities are good for online markets.
And why is all this happening now? We've been talking about this for the last decade even. How can we be trading Tesla stocks on chain? Mm-hmm. What have been some regulatory clearances? Is it technological that is leading to the why now moment for internet capital markets?
Well, I think the regulatory environment in the U.S., that one is a very clear one before and after November. So That's a big reason. And we went from having a hostile to relatively supportive administration, and then also the regulatory environment around that. So that's one big catalyst. Also, I think that the infrastructure needs to improve over time, and so you kind of have to take performant infrastructure and put it through a stress test, like we got put through, which is there's like real value being exchanged, but in a way, it's good that meme coins are not all that serious, right? Because when people lose money on meme coins, it's typically not your grandmother's retirement fund with follow-on social effects from that. So it's like a production test net, if you will, with real value, but a certain type of value or price, I guess you could say. So I think a number of these things have to come together. Of course, I would also hypothesize that it's because you didn't have Solana. And I do also mean that, in addition to being expected to say that, I would say it's because you need to have three things all in the same place at the same time and at scale and at maturity, which is network performance. Nobody wants to use Rails where you have to click a button and wait 2 minutes. It's just not a thing, okay? Like, I don't know even who here used 56K modems, but that was a while ago, if you were even alive then. And so that's just not a thing. And there's no amount of rationalization around, okay, well, this is a necessary trade-off for more security. We've just pushed the curve out of better is better, okay? So that's one. And the other one is you have a developer ecosystem, because if the extent of your developer ecosystem is just the people that are employed by your company, it's not open source, and so if a tree fell, did someone hear it type of thing. So you have to scale developer ecosystem. By the way, that is the hardest thing to build. There's been many, many people that have built unique blockchain consensus mechanisms that run, right? But there's only 2 developer ecosystems that exist at scale, and Solana is one of them, because it turns out the hardest thing anyone can ever do is to attract talent, persuade people to take a risk on a GitHub repo. It's kind of a crazy request, actually.
And bet their entire lives on it.
Yes.
Yeah.
Welcome to the club of max insanity, Cindy.
Oh, yes. we're here on it together.
And so that's the second one, developer ecosystem, kind of like talent layer. And then the other is that you have the liquidity in stablecoins. You can't have an economy, as much as we all love Bitcoin, people just don't denominate their lives in Bitcoin. No one thinks, this bottle of water cost me how many sats. It's just not a thing. And so you have to have scale, liquid, deep markets in stablecoins. And it took a while for that, even before stablecoins became now like the top thing on everyone's mind. We already kind of got to like the 100 billion stablecoin moment, I think, probably a year ago or something like that. So you had enough liquidity in stablecoins. And so you have to have those 3 things all in the same environment. And a lot of the other ecosystems out there, they've got 2 out of the 3, but no one has all 3 at the same time. And that's what you need in order to build a diversity of unique financial applications that are denominated in money that people actually use, delivered in a user experience that people find to be sufficiently competitive and attractive compared to the way they use the internet today.
Yeah, that's wonderful. And I think seeing Solana's growth from where it was in 21, the number of builders who've come to build these type of things, like completely organically, even fight to gain market share across all fronts, payments, DeFi, and having it all happen in one place is truly special. And yeah, I'm really glad to be in this with you. I think we're at time, but thank you so much, Lily, for joining us. Very bullish on internet capital markets. And yeah, thank you so much.
Thanks, guys.